Warren Buffett announced that he would retire at the end of 2025 and hand over the reins of the trillion-dollar company that he has built. Here's the most important lessons that we've learned from the greatest investor of all time.
Yes, love it. We were lucky enough to see Warren Buffett in Omaha a couple of years ago, and Charlie Munger. We shouldn't sell his influence short.
No way.
But he truly is the greatest investor of all time. I think, I was about to say in our opinion, but I think the numbers back it up. So he returned 5,500,000% in 60 years.
Yeah, it's incredible.
He bought a failing textile mill in 1965. And at this stage, the Buffett partnership had been, it had existed for almost a decade, and some of his best years were actually before Berkshire Hathaway. But in 1965, he buys Berkshire Hathaway, a failing textile mill, turns it into his holding company, becomes an insurance conglomerate, becomes a diversified holding company, becomes a $1 trillion company in 60 years.
Yeah.
Pretty amazing story. That works out to about 20% a year compounded over 60 years. And that makes him the fourth or fifth richest person in the world, depending on when you look, worth about $170 billion.
And just to contextualize those numbers, 5.5 million % over 60 years, the S&P 500 has done 39,000%.
Okay.
Which equates to a 10% annual return.
Yeah.
So incredible outperformance over 60 years.
Yeah,
I mean,
pretty amazing.
An outlier for sure.
So at the 2025 annual general meeting that was held last weekend in Omaha, Nebraska, Buffett announced that he'd be looking to hand over the reins by the end of the year, leave the company as CEO and remain chairman, but pass it on to the next generation. I think fair enough. He's 94, turning 95.
Yeah, it's incredible. So we're going to take the opportunity to go through some of the key lessons that we've learned from Warren Buffett, Ren, and there's so many to choose from, but today we've got 3, and then we'll close with a bit about Greg Abel himself.
So the first one, buy and hold and buy some more. And I think this lesson is particularly pertinent given what we're living through in the market now. But if you look back on Buffett's life, he lived through 15 recessions. And counting. He might be able to notch up his 16th this year. Yeah. So for those keeping score, 1929 to 33, 37 and 38, 45, 49, 53, 58, 60 and 61, 69 and 70, 73, 75, 80, 81, 82, 90, 91, 2001, the GFC, COVID, and now potentially that was 15. And now potentially the 16. Yeah. And like those recessions had massive impacts on Buffett's wealth. The stock market crashed and we can zoom in and sort of see from his net wealth how they affected it. 1973, by that stage he had a fortune of $34 million. But with 73 came the oil crisis, came high inflation, high unemployment. America suffered its worst economic crisis since the Second World War. He lost half of his wealth. From 34 million in 1973, he was down to 19 million in 1974.
Damn.
But this is a lesson that we want to reinforce over and over again. Buy and hold, buy some more, buy the dip, wait it out. There's never been a dip you shouldn't have bought, because by 1977, his net wealth was back up at 67 million. It was more than double where it was before the recession.
Love that. Well, that's not the only instance. If we fast forward 50 years, Ren, the same lesson is repeated during the COVID crash of 2020. Much older, much wiser. Buffett by this point was worth a whopping $82 billion in 2019. There's the effect of compounding for you. Coronavirus came, stock market crashed in March of 2020, and it was actually his 90th birthday. So not the best birthday present, because his net worth was down to 67 billion, wiping some 20 billion. But as he lived through many of these crashes before, he did so again in 2020. Stock market recovered, so did his portfolio, and by 2021, Buffett was back up and above what he was before coronavirus hit, worth $96 billion.
Yes. So we've said it before. We're going to say it again. The stock market has this just relentless grind upwards. The market crash is front page news. The recovery is covered in the business sections and on Equity Mates Investing podcast.
Yes.
But that is the first lesson that you need to know.
Lesson number 2 is you don't need to find unknown names. Warren Buffett's story is not a story of finding those obscure small cap stocks and letting them run. His portfolio are those household names: Coca-Cola, Apple, American Express, Washington Post, Geico. These are companies that are household names that are staring you right in the face, and you don't need to be worried about finding the hidden gem.
Yeah, and I think it's really important to stress when he bought them, they were household names as well. I mean, the most recent example is Apple. And it's crazy that from a return point of view, one of his best investments was just buying Apple in 2016 and holding it for a decade.
Yeah.
Like we all saw it. We all knew about iPhones at that point. But, you know, Coca-Cola was a massive company by the time Buffett was buying it. American Express was known. Washington Post was one of the major newspapers. I think that is just a lesson that we need to keep reminding ourselves, because the sentiment, the feeling that we all have is this company is well known and the value has already been realized. It's already priced in. But the lesson from Buffett is that the way that you make real money long term in the stock market is finding those companies that will continue to create more value. It's never about the value that they have in that moment when you're buying them. It's about what they do with the profits they make as they, you know, create new products, expand into new markets, hire the smartest people to keep growing. That backing that innovation and finding those companies that will continue to innovate. And so it's never about what the value is today. It's about what the value they'll create once you own them.
Absolutely. I mean, the Magnificent Seven has been that's the exact story over the last decade as well. Lesson number 3 is the effects of compounding are seen later in life. I mean, it's pretty obvious, but Buffett's story is the best illustration of long-term compounding and the effects that can really have on your wealth, and how that final sort of stage of that compounding is where the wealth is truly built.
Yeah. 99% of Buffett's wealth came after the age of 50. Growing your wealth is not linear. And like the numbers that we all put up in our lifetime won't be Buffett numbers.
Speak for yourself.
Dollar cost averaging into a core portfolio of index funds won't get us to $170 billion.
No.
But the chart will look very similar in that the effects of compounding come in the out years, and that, you know, 99% of our wealth, or a big chunk of our wealth, will come after the age of 50.
Yes.
So for Buffett, by the age of 50, and remember at this point, you know, he'd been investing since age 11.
Killing it.
He'd been it worked for Benjamin Graham. He had done the Buffett partnership. He had bought Berkshire Hathaway and turned that into his holding company and started that growth journey. He was killing it.
Yeah.
He was worth $100 million.
Yeah.
But at age 50. Today he's worth $170 billion.
Yeah.
So it's actually like 99 point something percent of his wealth came after the age of 50. And that is why, like, people often interrupt the effect of compounding too early. And it's, you know, it's somewhat boring to just keep saying it. Like, just keep buying, buy and hold, dollar cost average in, let the market do its thing. But this is why. Because it happens over decades. But what happens is so powerful.
Don't stop. I mean, I think about the effect of this on everyone who has been fortunate enough, unlike sort of the baby boomer generation, to have a superannuation account from 16 years old when they start working. That, the effect that's going to have over 40 years is going to be phenomenal. And people will really see that, if anything, through their super funds. So yeah, big lesson. If you ever want to show someone the impact of compounding, you're trying to convince them, drag out the story of Buffett, because there's no better illustration.
Yeah. So let's close out by just talking about what happens next for Berkshire Hathaway, because a number of people are shareholders. I mean, if you own the S&P 500 index fund, Berkshire Hathaway is one of the big holdings there. So Buffett is stepping down, and he's named Greg Abel as his successor. Now, Greg has been in the I guess the succession plan for a while. It
Yep.
was 2021.
Yep.
Buffett named Greg Abel as the successor.
Yeah.
And he's been at the company for a while now.
Since 1999,
Yeah.
has been his entrance. So his story, he used to work for a company called Cal Energy back in the 90s. And it was acquired by another energy company, which Berkshire then later acquired themselves. Buffett then installed Abel as the CEO of the energy company called Mid-American in 2008. And then from there, he's essentially climbed the ranks within Berkshire. He's the chairman and CEO of Berkshire Hathaway Energy, which I guess is the division that controls all of their energy investments. And he's the vice chairman of the non-insurance operations at Berkshire Hathaway and has been since 2018. For those unaware, Berkshire is really an insurance play, has a huge insurance business, which is looked after by another guy,
Ajit Jain,
yeah, who will still remain as the leader of the insurance business when Greg steps up into his role as CEO of Berkshire. He's on the boards of Kraft Heinz, Nuclear Electric Insurance Limited, and a number of other companies. But has been, I guess, the Buffett protege, so to speak, or has been, Buffett has been working towards this for the last few years. But Ren, for me, huge shoes to fill, if only from the quips that Buffett has at the AGM.
Yeah. Well, okay, so over under, Buffett for his AGM fills a basketball stadium, 40,000 seats in Omaha once a year, and holds people's attention for 8 hours as he just answers questions. Over under, how many people will Greg Abel attract? 10,000 is your over-under. Under, you reckon?
Yeah, I reckon, unfortunately, this will be the end of... Without Buffett there, it will be the end of the Berkshire Hathaway AGM conference as we know it.
Definitely, yeah.
And I think it'll probably eventually migrate to a larger conference center and not a basketball stadium.
Fair.
Which, I mean, this guy's been around for 60 years and has been such an inspiration to so many.
Buffett,
and has made so many retail mums and dads retirees multi-millionaires. Yeah. So that there's obviously a sense of pride, in excitement seeing him in real life. But real. Not to say that Abel is not able. But doesn't have the same gravitas, that's for sure.
Yeah. But I think for me, the thing is, how does Berkshire continue? It feels like a lot of it is set up to continue. Yeah. So the whole, the insurance operation is obviously going to continue with Ajit, and then a lot of the wholly owned businesses will continue to do their thing. It's not like Buffett was involved in their day-to-day. No. The question will be use of capital going forward, and there's Todd Combs and Ted Welcher who are brought in to be Buffett's, I guess, stock picking proteges, the investment managers, and that's really where the question will be. It's all this cash and profit that the conglomerate is generating. What will it do with that? Will they make the great investment decisions going forward? But, they've got $340 billion of cash on their balance sheet already. So it's not like they've been highly active with their investments. Yeah. And so that'll be the question going forward. You would think over time, this is just my theory, that there will be some agitating to get some of that cash out of the company by investors and stuff like that.
Definitely.
But that will be, years down the line.
Yeah, I mean, it's pretty normal for a new CEO to come in and want to affect some sort of change within their tenure, make some sort of statement. Whether or not, how soon he does that, he's not going to come out and be like, let's deploy 300 billion, but...
Yeah, I still... my theory, which, you don't see widely discussed, is that they're preparing to do the ultimate buyback of Buffett's shares.
Yeah, but he has very recently, I think, at the AGM, reiterated that he's not selling a single one of them, and it's all going to be dripped out, given away when he retires his stock.
Yeah.
So I love that theory. That would be awesome. because I'm a shareholder. But I think he reiterated that his plan is to not sell any.
But when he dies is what I'm saying.
When he dies. That's his plan. Yeah. It's all going to sit there and be donated to X, Y, and Z.
Fair enough. All right. Well, look, we will continue to watch this space, but it's a sad day when Warren Buffett retires, but I think well-deserved retirement.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.